Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist at Invesco, for a weekly review on activity in the Nasdaq-100. We'll also take a look at interest rate probability as per Fed fund predictions. It is great to see you as always, Ryan. Welcome back to Trade Talks. And so interesting when you think about February to January, that February flip that we saw in equities across the board. What were your thoughts on last week's trade?
Yeah, so it's kind of indicative of what we're seeing in those Fed funds futures, which we'll cover in a little bit. But after a sort of up and down week, QQQ and QQQM finished up down 0.13% for the week. That outperformed the S&P 500, down 64 basis points, and the S&P 500 value down 76 basis points. QQQ and QQQM, they started off on a strong note following earnings from NVIDIA, but markets fell pretty sharply on Friday the 24th after the release of January PCE data, which is the Fed's preferred inflation gauge. It unexpectedly came in higher than anticipated by economists. Both the PCE deflator and the core deflator accelerated when compared to the December reading, and the year-over-year figures for both readings climbed from December. PCE deflator jumped to 5.4% year over year from 5% in December, and the core increased to 4.7% from 4.4% in December. So that represents the first increase in the year over year figures from the previous month in the PCE deflator since June of 2022. And in the core from September of 2022. So basically, adding to the concern that the Fed's going to have to continue to keep their foot on the gas in terms of restrictive monetary policy, and this fight against inflation is still very much in full swing.
And Ryan, it's so interesting because Q4 earnings just basically, at a wrap now, 98% of the companies reporting. It almost seems as if they flew under the radar to a certain extent relative to how focused the market is on macro. So I want to take a look at these couple charts here in terms of how the market is interpreting interest rate probability.
Yeah, and it's changed, pretty drastically when you look at it today versus Feb 1. Right. And this has been the theme mostly for the month of February, and certainly in the back half of February. So, the PCE deflator report from Friday, that follows January's CPI report, which was earlier in the month on the 14th, that showed month over month increases in CPI and core CPI. And then on the 16th, you saw the January PPI report that also saw increases on a month over month basis for both final demand and ex-food and energy readings. So, market participants have sort of taken notice here, and based on the Fed funds futures, they've adjusted their expectations for the Fed funds rate. And in 1 month's time, from today, Fed funds futures, you can see that shift upwards on the expectations for those rates compared to February. And it's particularly stark when you look at the back half of 2023. Markets expecting the rate to be 60 basis points higher in July as measured today versus back on Feb 1, and over 100 basis points higher in January of 2024. Previously we saw a rate cut was priced in for July of this year, or expected for July of this year. Those expectations have now been pushed out to November. So, some of the pricing data that we've seen this month, I think, has somewhat addressed the disconnect that we've been seeing with interest rate forecasts from the street being much lower than that of the Fed projections. I mean, look at it today, and we're in line, and in some cases even over what the Fed's projecting.
And Ryan, if we take a look at the sectors that performed and underperformed in last week, what stood out there?
Well, tech and discretionary led the way this past week, and the largest relative contributor to both the sector's relative outperformance, being technology, and QQQ's outperformance on the whole was NVIDIA. And this maybe goes back to some of the earnings reports, right? I mean, I think if we go back like a month ago, some of them flew under the radar. They were somewhat mixed, less bad. Some provided guidance, but NVIDIA was largely viewed as positive last week. I mean, it's a semiconductor giant. It jumped by over 12% for the week, beat analyst expectations for both EPS and revenue. Company also gave some revenue guidance or a forecast for next quarter that beat analyst estimates, and any sort of positive guidance has on the whole been taken very positively by the market. And I think the other interesting thing to note was that the company announced its own AI cloud service. They're partnering with Oracle, Microsoft, and Alphabet to offer access to enterprise clients. And I think especially these days, all the focus that we've seen on AI, any sort of news around that, I think can certainly bring some excitement to the market. But the stock year to date is up nearly 59% through yesterday's close, and that's following a 2022 where it was down by 50%. So we've seen a number of examples of that within the Nasdaq-100, almost like a relative value trade, as we've seen investors reposition into some of those beaten up names and sectors from 2022. Broadly, when you're looking at sector performance, the best 4 performing sectors in the S&P 500 from last year, energy, utilities, consumer staples, and healthcare, are the worst 4 performers thus far in 2023. And on the flip side, you see QQQ's 3 largest overweights, communication services, discretionary, and tech, which were the 3 worst performers in 2022, leading the way higher in 2023.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.